Joining me now, Ross Gerber, CEO of Gerber Kawasaki. Ross, great to have you here. Thanks so much for joining us.
Thanks for having me.
So I have some of your highest conviction ideas that you sent over. I want to run through those, and then I want to know if these are names that you are waiting to buy or that you would buy now. The first one is Netflix, which did have a dip to buy until recently. It's actually done quite well more recently, although it's still off, almost 30% from the highs. So tell us why you like Netflix.
Well, Netflix has been a core holding for a very long time, and when they started down this merger pathway, we were very disappointed with their desire to be involved with Warner Brothers because it's not a great asset, and it's never made anybody money despite 5 separate owners. So nor does Netflix really want to release movies in the theaters. So, we saw this as a departure from their business model and problematics, that we sold some of our stock in the higher prices, and then it declined too much. And then we added it back around the $75 range. But as the T-winds shifted, we became very confident that Netflix would walk away from this deal, make billions of dollars, and avoid a disaster, and then position themselves to be the dominant player in Hollywood as Paramount Skydance swallows up, so much debt that they're not going to be able to be competitive in the future. So in a way, it almost like took out competitors from Netflix instead of adding a competitor, because Netflix got them to overpay by 2 times what Warner Brothers was even worth. So this was just a masterful play from Netflix, and we expect them to continue to dominate, and we expect the stock to fully recover back to around the 125 range as they move forward this year. So we still see Netflix as a great opportunity, and we're buyers of the stock.
Okay, next up, Eli Lilly, one that's down about 6% year to date. Tell us why you like this one.
Well, like is a nice word. I love this stock. They are changing the world for a much better place through their GLP-1 drugs, and we're just about a month away from getting approval for the pill. And the GLP-1 pills, which started with Novo a couple months ago, have been wildly popular, and the Lilly pill is even better than the Novo pill. And it's a once-a-day pill you can take at any point in the day, and it cuts your diet and you lose weight. I mean, this is it's like a dream for people, I think, for generations, to be able to take a pill and lose weight. And with obesity being a massive problem in America and globally, this is a wonderful step in the right direction. But even better, they have this new drug, which is called GLP-3, which is coming out next year, which is way better than the current versions of weight loss drugs, and really, really effective. So everybody in Hollywood's already taking this illegally already, and that's why you don't see a lot of overweight people in the TV shows anymore. But essentially, this combination, along with their other drugs, puts them in the pole position, and their main competitor, Novo Nordisk, is extremely poorly run. So they're not only a better company, they're better management and better drugs. So we expect Lilly to dominate this market for years to come.
Okay, the inside scoop from LA with GLP-3s.
Yeah.
All right, here's one that the market certainly loves this year, Micron. Shares are up more than 40% in 2026. You like that one, you also like Nvidia. Would you be a buyer of both here?
Yeah, in fact, this is probably one of the things that I think is so crazy about the stock market right now, is how mispriced Nvidia and Micron are, even Micron more than Nvidia. I mean, there's like this continuous doubt about the future of AI, despite everybody diving in and using AI at every major company in the world right now. It's so funny how in one breath, everybody's like, oh my God, AI is changing the financial industry. Oh my God, what's going to happen? And then the other breath, they're like, well, maybe these chip estimates are too aggressive, And I'm like, we are at the beginning of what this is going to be. And the valuations are just wrong with Micron, because there's just no acceptance that their earnings are going to go from like $8 a share to like $30+ a share. And so if you just do simple math at $30 a share and 15 times earnings, Micron is still undervalued. And 15 times earnings seems absurd for a chip company growing by hundreds of percent. So if you, God forbid, you do 20 times earnings, you're getting into some big numbers here. And then with Nvidia now trading at a forward multiple of under 20, where its long-term PE has been around 40 to 45 for over a decade, if Nvidia makes their numbers this year, the stock has tremendous upside. So, the doubt about these numbers creates an opportunity for investors. If you believe in AI, Nvidia and Micron are the two players that benefit the most from infrastructure build out. And it just seems like the market just has mispriced these stocks currently because of doubts about something that everybody's all in on. So it's a huge opportunity, I think.
This isn't on your list, but I have to ask you about it because I think every conversation we've ever had has involved Tesla. You've been both bearish, you've been cautious. Tesla is about 20% off the highs right now. Would you be a buyer here, or are you still in the
I'm still a seller of
positive
Tesla here, and I think Tesla's got big problems in front of it. You know, Elon's 100% focused on SpaceX right now and trying to get that money for XAI and go public. Tesla, you know, is struggling in all areas of their business now other than battery storage, which is really the standout in their business is storage, which is growing. I mean, really great business that they have. But they've given up on the EV business. They basically don't care about selling cars anymore. And consumers don't like Elon as it is, but their lack of focus, advertising, or any real attempt to sell cars ultimately will hurt them greatly because that's their cash flow business, you know? And by just sacrificing this on the hope of the robo-taxi, because we know the robot's far off into the future and we're not sure whether there's a use case for that robot yet. We've seen these videos of robots folding clothes and stuff, but it's definitely not as effective as a human. And what it turns out is humans are really effective at many things, and that's why we've existed for, you know, millions of years. So it just turns out that maybe this robotics thing may or may not work out to the economic benefit that they hope, but we won't know for many years into the future. So they've bet the company to be basically an autonomous Uber. And if you look at what the value of Uber is and you times it by 4, it still doesn't make any number that Tesla has on a valuation basis make any sense. So I just show me how the numbers make sense. Now, it doesn't matter what the stock is in my mind. From a financial perspective, the stock is worth like $200 at best. So, you know, I just think it's a tough stock to own. And I get, because I have clients who want to own it, I get they believe in Elon and this vision of the future. And I'm not saying to them not to believe in that. I just don't believe in the economics of that future. And it has to be proven to me, and it hasn't yet.
Ross Gerber, CEO, Gerber Kawasaki. Always a pleasure. Thank you so much for joining us.
Yeah, thanks for having me.